Welcome to today's market report.
The dollar index ticked down 0.27% on the day to around its lowest in 2 months, in line with a retreat in US Treasury yields. Against the yen, the dollar dropped to a 2-month low, down around 0.7%, while sterling hit a 15-month high after pay growth exceeded expectations. Longer-dated US Treasury yields fell on Tuesday as investors awaited Wednesday's inflation for further clues on whether price pressures are abating and if the Fed is closer to the end of its rate hiking cycle. Wall Street posted gains across its major stock indices. The Dow rose 0.93%, the S&P 500 and 0.67%, the Nasdaq added 0.55%. The MSCI's All-World Index rose 0.85%, lifted by gains in European shares, with the stock 600 up 0.72%. Investors digested recent comments from Fed officials who said the level of inflation warranted additional rate hikes, but the central bank is nearing the end of its monetary policy tightening cycle. Economists polled by Reuters expect the consumer price index to be released Wednesday morning to have risen by 3.1% in June after May's 4% increase. That will be the lowest reading since March 2021. The core rate is expected to have dropped for a third month to 5% from 5.3%, though that is more than double the Fed's 2% target. Last week's employment report showed far fewer workers than expected had been added to non-farm payrolls last month, which unleashed US dollar selling but did little to shift the needle in terms of rate expectations. Second quarter earnings will be watched this week, with results due from some of Wall Street's biggest institutions, including JP Morgan, Citigroup and Wells Fargo. The British pound rallied to 15-month high of 129.34 on the back of UK wages jump and US dollar weakness. This is today's market report. Thanks for listening. We'll see you next time.